Hey everybody, welcome back. Tradeways Market Monday, Make Market Monday. This is, we're early on in this series, but I gotta say, I'm really enjoying this series so far because I think it just cuts right to the heart of it, right? We don't wanna waste time. I don't think anybody out there has time to waste. And if you're on this channel, if you're following Tradeway, there are things that you are trying to pursue. There are financial goals that you are trying to get closer to. I don't know about you. I'm pretty sure you might say the same as me, though. We're trying to get there further, faster, with less work. That's what we're trying to do. So I think this series just kind of cuts to the heart of that. It's not that scary. Sometimes, it's really cool. I'm actually not in California today. I am in Texas. I am at the home of Dave and Katie Huber, who, if you followed Tradeway for any amount of time, you may have seen their faces. Benjamin, happy Market Monday from Dallas, Texas. Well, Benjamin, that's what I'm in the process of sharing as well. I'm not in Dallas, but I'm very close, near the Tradeway home office here out in Texas. You may hear the storm in the background, something that I definitely miss from Texas to California. We get them, but we don't get many of them, so it's pretty cool. You may hear that in the background. So far, no issues with our connection or anything like that. But that said, I am here and I'm watching Dave with his kids, okay? He has 3 beautiful kids here at the house. And sometimes it's helpful and the kids are scared. In fact, I just saw this with one of them outside running through the water's overflowing off the house, and at the beginning they were just running outside, running around through the water that's pouring off the side of the house, and one of the little ones is scared. I don't know if I can do it. And even though that's a little bit different, right, than talking about our dollars, sometimes it's still helpful. This is true of me. It's just helpful for somebody to say, you know what? I know it feels scary. It's not that scary. And I've been coaching and trading for a little while now, and I've met students. I know this. I've worked with them even as soon as today, this morning, where there's things getting in the way of our trading. It's not that we don't understand. That's a separate thing. We exist to help you understand and know the confidence that comes from understanding, and that's part of what our session today is going to do. But at the same time, it's also helpful for our mindset. Sometimes things get in there and we get that what's called stinking thinking, and it's almost like, oh, this is just bigger than me. I could never do this. Well, we're going to break that off right now. We're going to break that down in this session, and I'm just going to share my screen and I'm going to take you through a trade. Now, if you followed this program on Mondays, we've looked at the market extensively. We've looked at what is happening in the markets right now, and through the course of it, we have looked at a little bit of just finding trades, what makes a good trade. I'm going to review a little bit of that stuff, but primarily we're going to jump from there. Once we found a stock, okay, and I'm going to give you 3, perhaps 4 major vital keys, okay? This is going to be good. I was sharing this with some of the students that are inside one of the Tradeway programs, so I'm going to give you pieces of that today for this broadcast. And you're going to have some inside information on what's these things we're really looking for to find a good trade. But then, again, we're going to break that fear off, or even just bring another measure of clarity for people who are using the Tastyworks platform, which most Tradeway students use. They don't have to, but they do. We're gonna go through the steps to show you how to actually place the trade. And I think for a lot of people, seeing me just go ahead and place that trade is going to be a really helpful thing. Benjamin, I can see your comments there. Thank you for welcoming me. And anybody else who's joining us on the broadcast, you can go ahead, jump right in the comments there. I'd love to hear from you guys. Know your name, where you're from, what you're feeling, what you're looking for in this broadcast. And as we go through it, if you have any questions for me, you can certainly just drop those right in there. And I would be more than happy to address that for you as questions arise. Okay, so let me go ahead, share my screen to start here. We'll see the infinite loop, as always, pop up. Okay, so we're jumping over here. We're looking at a stock, okay? Now, I want to say a couple things because we're going to look at 2 stocks quickly. I said we would review some things and look at some of those things that I am always, can't stress that enough, looking for. when I'm in a trade. And as I grow in trading, I'm going to add other pieces of information. This is why Tradeway has a very comprehensive training program. But it doesn't mean that what I'm about to talk about today isn't extremely important or that it will ever be replaced. I like to say this isn't the beginning, right? This isn't just the basics. This is the foundation, right? This is the foundation. So we never lose this. So what am I really referring to? What are these things? Well, before we actually go and place a trade, we need to understand whether or not we've got a good trade that we're going to place. Because you see, if you don't know how to look for a better trade versus just any old trade, then you can do what most people do. Now, I've said on this broadcast before, Wall Street has a term for us, you and I, and that is retail traders, right? We're not big money traders. We're not hedge funds. We're not prop firms. We're not investment banks, and so on and so on. That's not who we are. We're retail traders, okay? Now, there are specific benefits to being a retail trader, but I can tell you this, statistically speaking, most retail traders don't use an edge. They don't use a system. They don't have something that they use to help them identify a good opportunity versus a bad opportunity, or at least a not so good or as good opportunity. So I'm going to review a little bit of that with you right here, which is pretty cool, so that you guys understand what I'm talking about, and you're always looking for it. You're always going to do that. That is always, always, always going to happen. And your neighbor, whoever does not have this training yet, you can always send this video along to them, but they are more likely to come in and just purchase anything based on news, based on what they think is going to happen in a company. Guess, intuition, hunches, gambling, throwing mud at the wall and seeing what sticks. So what have I got here in front of me on the screen? Well, I'm going to tell you, okay? Obviously, we've got a stock, okay? And I have some way of actually visually looking at the stocks. You've seen me do this every time we've been on here on Mondays. So here it is again for those of you who are new, for those of you who are watching on the recording. We got to have something that shows us the stock. Well, I want to say, this stock is in a great pattern. Now, we teach this pattern, okay? This is a price pattern. This is an uptrend. So number one, it's in a pattern, and I can see the pattern, right? I know what the pattern is. That's number one. Number two, I've drawn support and resistance on that pattern. That bottom line and that top line, support and resistance. I know where to buy it. I know where to sell it. Because statistically speaking, on this chart, when it gets to that bottom line, it bounces up. When it gets to the top line, it bounces down. That is starting to formulate the edge that I need to see to know this is a better opportunity than another time. And I can't stress this enough. I've said this already. We get into trading and we can actually start to forget or set aside or minimize some of these things that are absolutely foundational. If you don't have these, according to our approach, you don't have a trade. So we wouldn't even move on to the next stage that we're going to focus on today unless we had this, which is why I'm reviewing this. Now, if we've got a pattern, support and resistance, then we want to have at least these three numbers. Now, I'm not going to go into these in detail because it's not the scope of the session today, but we want to have at least these three numbers. One, where am I going to buy the stock? I want to do this before I actually buy it, before there's any real risk on the table. I want these three numbers because it's going to help me be objective and control my emotions. So number one is, where will I buy the stock? Okay, that's going to be a bounce at support. I need to know what that number is going to be. Where am I going to sell this stock? What's the sell point on the stock? Okay, that's the second number I need. And then a stop out. I need to know, how do I place a stop out? We're going to look at that, okay? How do I place a stop out? And again, we go into all those things in more detail in the program. Today, I just want you to know those three numbers are crucial. That is a very basic trading plan. And we need to plan the trade, as they say, and trade the plan. You can't trade the plan if you haven't planned it, right? If you don't have a plan. So that's the next thing. So do I have a pattern? Is it clear support and resistance? Is it at support? And do I have a plan? That's what I want to have. So we're going to go from here and assume that we have those things in place. And you can see this pattern, by the way, I'm not saying this pattern is at a place where we would buy it right now. Why? Well, primarily I would say on this stock, because right now we are not at support. Okay, the stock is not at support. So for me, I am not going to look at buying a stock that is not at support. And that is the case on Carvana right now, which has been performing pretty darn well, looks pretty good. Okay, so make sure we don't have any questions there. So what do? If I look at this and I go, you know what, I want to buy this stock. Now, this I recognize is $134 a share. So for most of us, this isn't necessarily a stock that we're going to go trade buying shares. This is also part of the reason we teach options. Okay, we extensively teach, and most of our students trade options. We're not going to go into options today, and you don't need to know what that is. I just wanted to throw this out there and explain that, yes, this is a higher dollar stock. Some of these great growth companies are just trading in higher price ranges. This can be prohibitive to some degree for stock trading. There are stocks out there, obviously, that are in lower price ranges. And when we're trading stocks, that is primarily where we're going to look. But part of the way that we work around that and are able to trade with these stocks, if we don't have a lot of capital, is we can trade options on them. So just word to the wise, I throw that out there as well. Here's another good one. It's been performing very well. It's now actually broken out of the pattern, okay? But same thing. This is a bit higher dollar. You can see, wow, we were down to 32 bucks a share. We're up to 120 bucks a share. So this has been doing quite well. So we're looking for something strong, looking for something clear, got support and resistance. We're feeling good about this. We're ready to go. We've got the S&P over here. S&P is in a pattern, same deal. I've got a pattern. I've got support and resistance. Again, we are not at support. Look at this stock. Okay, this is the market right now. We are not at support. Does that mean it's not going to go up tomorrow? No, it doesn't mean that at all. We don't actually know what's going to happen. But we know that based on the pattern, when it's got to this level previously, it's been coming down. So right now is not the best time for me to buy. So that said, we're just looking at this, if you will, theoretically, so that we know what to do. Okay. So just once again, I know, hey, Kelly, I didn't see your comment in there with Benjamin's comment. So that's great. You're from Oklahoma. Awesome. I will actually be in Oklahoma later in the week. So glad to have you on here, Kelly. Everybody who's on here, I'm so glad to have you. I just want to say that again. I know some of you just tuned in. So we are just looking at, what do I need? What do I need to feel like I've actually got a trade? But once that happens, where do I go from there? And ultimately, ultimately, I'm going to show you, it's not that scary. It's not that scary. It's not that scary. It's just scary not to know. But after today, we don't have to worry about that. We're going to know more. So I'm going to assume in this broadcast that you have a Tastyworks account. Now, pause there for a second. Blair, do I have to have a Tastyworks account? Do I have to use Tastyworks if I'm going to do this? Well, no, you don't. Now, some of you know that, some of you don't. That's okay. There are multiple, in fact, there are many brokers that you can go with, and that is what Tastyworks is. It's a broker. Why do we call them a broker? Because that's exactly what they do. They are the go-between for us and the exchanges that buy and sell the stocks. They actually broker the deal between me and the exchange. So when I say I would like to buy some, well, what do we have here? We have Apple. When I'd like to buy some Apple, then they execute that. They broker that transaction. So when I say broker, that is what I mean. There are many different brokers. So specifically, this is Tastyworks. Now, I'm not going to go over specifically why we choose Tastyworks today, but generally speaking, it's because they have a good platform. They have low fees, in some cases, no fees, and they have good customer service. Okay, so no matter who you look at, those are things you want to be thinking about if you're looking at a broker. Tastyworks is the recommended broker from Tradeway. Again, that doesn't mean you have to, but that is the one we recommend. So you're gonna have an account opening. All that to say, you're gonna have to open an account. with somebody, in this case, Tastyworks. So we're just going to assume that that is who you are going to trade with. Now, we were over here. We were looking at Carvana. So what would we do? Well, we need the ticker, this little ticker up here, right? CVNA, okay? So I would come over into my platform up here in the top left. I would click trade. It automatically goes to this. Whoa, what is this? All these numbers. This is all options. So all we need to do is go up to the top left here and click stock, okay? If you don't have that pop up and it just goes straight to stock, it's just because you don't have the ability to trade options in your account. You didn't request that, so we won't even worry about that. And Tradeway does have some videos and programs on how to walk through setting up an account and stuff like that as well. And we may get into some of that in the weeks to come. But you'll just go to the stock, and we were looking at, oh, let's go ahead and get rid of that. You can type in the actual name of the company. Oops, sorry guys, I'm messing it up. You can type in the name of the company and it'll still pop up, or you just remember the ticker and it'll just pop up. Either way, right? So we go ahead, we press that, it loads it, and again, it's assuming that we're trading options because I have that, and that's what I primarily do in my account. So that's why it's switching back over to table. Curve, we're not even going to worry about. It's actually the same thing, but it just looks kind of crazy. I don't even use that, so don't even worry about that. Stock, okay? So what would I do? Now we're going to assume here that we are wanting to buy the stock. We're not in the position yet, right? We're not in the trade, so we're not looking to sell because we don't own anything yet. Okay, so the first thing we do is buy to open. Buy to open. I'm going to buy the stock. That's going to open up the trade, and that's why I'm choosing buy to open. I won't go into this much, but just for those of you, those inquisitive ones out there, why is there even a sell to open? Because it's possible in stock trading at a different point in time, not now, we're not covering this today, you could actually sell the stock to open the trade. You say, what? How do you do that? We're not going to go into that today. Again, I don't even do that. Okay, that's totally different than what we do. So we're just buying to open. Here's the thing. It's not that scary because there's all these things going on, but once we know what we focus on and what we don't need to focus on, then all those extra things that might throw us off, we don't even need to pay attention to them. In this case, buy to open, right? We're always going to go to buy to open, which makes sense, right? What do you do in stock trading? You buy low, sell high. That's the ideal, right? That's what we're trying to do. So we want to buy to open. So in this case, we can see that the stock price is $136. Let's go. Oh, no, I'm going to go right here. Now this is 134. Now my quotes on here are, there we go, $134. Okay, so it pops up at 136. You say, well, the stock isn't 136, it's 134. So we just need to come down here, and we've got a couple of choices. Okay, this is where some of you, I think it would be helpful if you want to take some notes on this, you could do that, because I'm going to show you a couple of things regarding the order. And this, when we talk about how to place a trade, the screen that we're looking at right now, this is really the whole thing. Okay, we're assuming you found a stock. We're assuming that you have an account open already. This screen is really the one that you're going to do everything on. And then we're going to actually send it, and we'll see a different screen. But this is where we're going to spend most of our time. So we're buying to open, and we can see there's a bid price on the left here. There's an ask price on the right, and then a mid. Okay, mid is something that Tastyworks has put in there for you. So they're just telling you, Blair, what's the number that's at the middle? What's perfectly at the middle between the bid and the ask? It's the mid. Here you go. We did it for you. So then I know. Okay, because here's the thing. You have two kinds of orders to buy. You say, Blair, there's not just one order to buy. Nope, there's two, because they function a little bit differently, okay? One of them is for speed. If you want an order to be more favorable in speed, you would use the market order. Okay, it's called a market order, and it's faster. It will get filled just like that. Every time. Every time. Now, there's another order. It's more sensitive to price. Price. If you're less concerned about how fast the order is executed, and you're more concerned about how much money you're going to spend, then you would use the limit order. Why do they call it a limit order? Because you get to say, this is the limit that I'm willing to pay. This is the limit I'm willing to pay. Whereas the market order doesn't have a limit to it. It just says, hey, fill me as quickly as possible at the market price, the fair market price, okay? So if you are looking at the stock and you're saying, geez, it's moving really quickly and I want to get in quickly, you might consider just using a market order, okay? You might consider just using a market order. But if you didn't need to have something that was catering to speed like that, then you would be able to go ahead and use the limit order. Now, how do I change it between the two? Right there. See where it says market order right there? I just go ahead and click that button. And now there is no price, right? See, I can't enter a price anymore. I'm actually clicking on the screen. It won't let me enter the stock price anymore because it's saying you're just going to go ahead and tell the market maker, which is the gentleman or the woman who's going to execute my order. You're just telling them, hey, give me a fair market price. So all I'm going to do is click market order, and the price is now going to be set at whatever market price is. You have less control over price. You have more control over time, okay? This is good for when, again, you want to get in quickly, or perhaps if it's going against you and you want to stop out and you need to get out quickly, you'll be able to do that with the market order, okay? So you can do that. You notice that the limit price is no longer there, but we still need to set the quantity, okay? How many shares do I want to buy? You wouldn't obviously want to miss that. 150 shares, 1 share, okay? Now, sometimes people ask me this, am I going to pay based on the amount of shares I buy? No, not with Tastyworks. In fact, I've never heard of a broker that will charge you based on the amount of shares. So if I buy 1 share or I buy 1,000 shares, okay, it's going to be the same. It's not going to change, okay? And I actually think, I haven't done a stock trade, to be totally honest, because remember I said earlier I do options. I haven't done a specific stock trade with Tastyworks in a while. I believe their fees are actually 0 for stock trades now, but we're actually going to find that out. So let's just say we're going to do a market order and we're going to buy 1 share. Now I'm going down here to review and send. Okay, I don't need to mess around with all this other stuff. I've already chosen market order. I've chosen what kind of order I want to use. I'm not going to work. See, I can't even choose these other ones here. So I'll click review and send. You'll see here, opening market orders are not allowed when market is closed. So obviously that's just coming up because the market is closed. So that is it. If you notice, you know, I've got this bid. I can zoom it in here for you guys at home to make sure you can see. Let's talk about the bid-ask spread for a second. What do I mean when I say bid-ask spread? Well, every stock, if you didn't know this, every stock when you buy it or sell it is going to have 2 numbers. Okay, 2 numbers. You're going to have the bid and the ask. Okay, the bid is this bottom price. It's a lower price. This is a higher price. Remember I said the mid is just something Tastyworks has provided for us, but the market maker, the guy or the girl I'm buying and selling from, they're going to have 2 prices. Here's an easy rule of thumb. We always say this around Tradeway. Okay, the bid and ask, you're always going to get the one that you don't want. So think about that. If I was going to buy a stock, I'm going to buy 1 share. Would I like to pay less or would I like to pay more? Well, obviously, you'd like to pay less, and so would I. Okay, so that would be the one that I want, but you're going to get the one you don't want. So the market maker is going to ask me for 136 a share. Okay, he's not going to be happy giving me this price, 134.50. That's the one I want, but he's going to say, no, Blair, you want to buy? You got to go towards the ask price. That is what he's asking me to pay. Okay, 136. Well, what's this mid price for? Well, let's zoom out. Go back for a second. Let's assume we're not going to use the market order. Then we could say, how about you get me into the mid 135.25, which is what it shows us there. What have I done? I've said, okay, I understand you're asking for 136. Okay, there's two prices. This is how the market maker makes their money. Somebody out there is going, Blair, why on earth is there two prices? Well, the easiest answer to that is this is how the market maker makes their money. Okay, they take a cut. Okay, and this bid-ask system is part of the way that they do that. Okay, so we have to work with the bid-ask system. Okay, again, that's the simple answer. But what we can do is go, you know what? I'm not going to give you. We just got an alert jump up here. So it's changing after hours. I'm not going to give you, see, it's changed now, 134.50. Okay, I'm not going to give you 134.50. What if I said, let's go halfway? See, the bid-ask spread is not very big anymore. It's just updated. So 134.36 to 134.50, that's not so bad, right? We're talking, we're talking 14 cents. And stocks typically have very small bid-ask spreads, okay? Sometimes even only a penny, If it's a penny, then you're just gonna use a market order because really there's no point in negotiating, which is what the limit order lets you do, is lets you negotiate. But with 1 penny, there's no need to negotiate. You might as well just get in, right? You might as well just use the market order to get into the trade. You can still use a limit order though. It certainly is something you can do. But in this case, I could go, okay, 134.43, because remember, I'm going to get the one I don't want, which is 134.50. But hey, maybe we can make a deal and I'll go to the middle. I'm not coming all the way to where you want, but you're not coming all the way to where I want, which would be the bid price, 134.36. So how about we try right in the middle, 134.43. And then I can do that. Now again, if the stock is moving quickly, that's not going to work. He's not going to fill that. The prices are going to change and I'm going to get left behind. So if I'm looking for speed, market order might be the way I want to go. The limit order is going to say this is the limit I'll pay, 134.43. Now I can change that. I can go a little bit further towards him. Now, word to the wise here. You don't want to get stuck in a battle of stubbornness with the market maker. If you have yours set at 134.49, 1 penny away from what he's asking you, and he's not filling that, okay, which can happen sometimes. If there's low volume on the stock, here's a hint, low volume stocks, it's harder to get what we call a fill, okay, getting a fill that you want. So if you're not trading a high volume stock, that can be a problem. But just to say, if you were a 1 penny away from what he was asking for and he still wouldn't fill it, I've had times, I'll just admit to you guys, where I've been stubborn enough where I'm trying to force the market maker to agree with me on a price. And really what's happening is the trade is moving and I might be missing out on the best entry price for that trade. So something to think about. Okay, so that's the difference between the limit price and the limit order and the market order. There's two kinds of orders. One is for speed, one is for price. Good news is on stocks, that bid-ask spread that we're talking about here, it's not usually very big. In many cases, it's very small. So if you get one of those prices that's closer to what the market maker is asking, it's probably only going to be a matter of pennies anyway. So not a huge deal. So then what we would do, same as before, we would just go ahead and review and send it. So in this case, it says your order will begin working during the next valid session. Now, notice last time it said you can't send it in. I can't send a market order when the market maker's not there. And they're not there because the market's closed right now. A limit order will just be sent in electronically, and it will, if you will, sit on the order desk until tomorrow morning. Okay, so I would not do that. I would not send one after hours for a trade like this. I would wait. I would wait till the market opens, and then I would go and send my order at that time. Okay, so let's just quickly check. Let's make sure we don't have any questions. Let me pop this off of here. Robert says, hey Blair, I've been following you and Tradeway since the time you and Micah taught step one in San Antonio, summer 2015. All right, there's some throwback there. Awesome. Thanks for all your advice and your teacher spirit. Hey, Robert, it's good to hear from you, and I'm glad to hear that you're still with us. That was some years ago now. So I think we've probably both come a long way even from then. I've got a lot more trading experience from then. I'm sure you do too. And just working with everybody, all these great folks out there. It's been a pleasure. It's been a joy. So glad to see you on here, and glad that we have this, this way to connect. It's certainly, I love being at the meetings and actually meeting people and seeing you guys and looking over your shoulder and working with you. But this obviously has its own advantages and benefits too. We can just go ahead, fire up the screen, and off we go. Okay, so let's continue along here. That is how I'm going to what? Buy to open. So if we're assuming, let's say, I'm just going to go back in time. Let's say, look over here on the right side of the chart. That's a bounce at support. So that would be more of a day that you're going to say, that's for me is a day that I would like to buy the stock. Or I would certainly be looking at a much better entry for the stock on that day, right? It's at support. So then what you're going to do is you're going to enter a stop order. What is a stop order? Well, this is what we call the stop out. But if you look on the screen here, make sure everything's working. Yes. You look on the screen here, you notice there's nowhere on here that says stop order. Now you see stop limit, you see stop market, okay, but you don't see stop order. So I want to clear up some of that confusion there. We call it a stop out. That's what it is, but you don't actually see the term stop out on the screen. So now we're at stop limit and we're at stop market. So what's the difference here? Well, remember we just went over the limit and the market. There's a cool little thing on here, and it'll give you a little bit of information. So if you're looking for just a little bit of a heads up, after we're off this broadcast, if you have some questions, obviously you can reach out to us. But right here, it tells you this is how you turn it on. A stop limit order will become active limit order when the stop price has been reached. Okay, market order. A stop market order will become active market order when the stop price has been reached. So they basically kind of say something very similar. So you're like, okay. So let's take a look at this. So if I put in a stop limit, what is this going to do? Now, if I turn on the stop market, it turns off the stop limit. I can't have both. Let me say this. When we are in a trade, not there. We'll go here. What am I doing here? This is my insurance. Okay, so if I buy the stock, now you have to buy the stock before you can put in a stop out. Okay, otherwise the stop out isn't going to function properly. What we want it to do is be a stop out that gets us out of the trade if it goes against us, which is pretty cool. Like we can get in the trade, and if it doesn't do what we want it to do, it's just going to kick us out of the trade. So that's a good thing. So this guy, let's just use this line as a visual. We want to put our stop out. Let's just say, now this isn't necessarily according to the rules. Like I said, we're not going to go into the whole scope of how to set up stop outs today in terms of where I would do it on the chart. But let's just say, our entry point is around 114, and we're going to put it down here at 10. Let's move it up a little bit. Let's just say it's 107, okay? 107. So that's where we put our stop out, or maybe just slightly below that. So then I've got to be able to tell the system, hey, I'd like an order in there that makes you aware that as soon as if it hits this price, I don't want to be in this trade anymore. And I don't want to have to come to my computer and tell you to do that. What if I could just tell you now, and then if and when it happens, you'll just do it automatically for me, okay? That's what this is gonna do. So it's clicking on these prices, the stop market. That means as soon as the price hits what I put in here, it triggers what? It triggers a market order, okay? This is the one we're gonna focus on, okay? A stop market. There are certain limitations to the stop limit. We're gonna focus on the stop market. So what did we say based on the chart? We're not just guessing a number here. We're gonna say, just because that's where our line is, 106, that's not right. Oh, I see. It's still got this 134 over here because we're back in time. Okay, I'm confusing myself here, guys. 106.74. I'm thinking, wow, that's a long way down. That's too far of a stop out. But it's actually going to work. 106.74. Okay, so what's going to happen here is if that price gets hit, it's going to trigger a market order, and it's going to get me out of the stock. Now, I'm not going to go into detail on this, but I want you to focus on the stop market. That's what we do at Tradeway, because the stop limit is going to trigger an order that may not get me out of the trade depending on what happens. So market order, speed and ease, it's going to kick me out of the trade. Good news is, again, this is a stock. That bid ask is not very wide, so the market order is not an issue. Now, I want to add something else. What are these things down here? Good till cancel isn't currently turned on, but I can click it and turn it on. What does good till cancel mean? Well, again, you've got this little guy right here, right? Toggle to allow your order to continue working each day. Now, what that simply means is if I don't choose GTC or good till cancel, once the market closes, it's going to expire. Okay, so let's just say Blair is trading on Tuesday, tomorrow at 1:30, and I go and I'm in Carvana and I'd like to put in my stop out, and I don't choose good till cancel. That means the order is not going to be good until I cancel it. It's just going to cancel on its own. It's what we call a day order. But I don't want that. Why? Because then Wednesday I have to go put the stop out in again. Or I won't have any stop out, which means I have no insurance, which I don't want to do that. So good till cancel. I want to make sure to keep that on. You could put good till date. You know, you could choose that instead, and then you could put the date you'd like it to expire. I don't use that. I don't see the point in that for me because it's just going to be till I cancel it. And remember, you can't do this until you've actually bought the stock already, okay? So you would do that, and then it's same thing, review and send. So remember I said we got to know, where am I going to get in, where am I going to get out, stop out, and where am I going to sell the stock, okay? So this one's going to be a little bit different. We have any questions out there? Nope. Oh, Jeffrey, I didn't see your comment there. Howdy to you too, sir. Good to have you as always. Okay, so now let's say we actually are, we own the shares, okay? The screen you see in front of you is going to look a little bit different, okay? Because it's not going to say sell to open. It's actually going to say sell to close. Sell to close, okay? You can see some new trades are popping up there. Because you actually own the stock, the system is going to give me the option, you the option, to sell the stock to close. And that's what we want. Buy to open, sell to close. And then we're going to do the same thing, right? We're not going to use the stop orders. We're going to use a limit or a market, depending on whether or not I want speed or price, okay? Let's say the stock's not moving really fast, but it's gone up and it's hit my sell point. Okay, well, didn't we come up with the sell point before we ever got in the trade? Didn't we know what that number was before we ever even bought the stock? We did, right? We talked about that. We've got to have that in place. So we already know the price we were going to sell it at. Now, in this case, we didn't write that down for paper's sake. But let's say we even just went up to the previous high on this stock, because we haven't gone quite up to support here, although we're very close. In fact, We could even just say, let's say today was the day we were going to get out, just for education's sake, 136.25. Again, we would already have this written down, so we certainly wouldn't be guessing. 136.25. Now, how many shares did I buy? Well, if I bought one, I want to make sure I have one in here. Okay, one share. If I bought 1,000 and I want to sell them all, make sure you've got the same amount in there. You're not selling 50 when you bought 150, unless you know you want to hold on to some of those shares and you have a reason to do so. Otherwise, we're selling them all. Now, if you were to go into down here, your portfolio, okay, you could click on portfolio, and in here it would have listed right where my cursor is. See, it says you have no open positions, right? It would have any stock that you own. It would show it right there. You could simply right click that stock and it would say close position, and you could just click on that. And what's it going to do for you? It's going to automatically pull this screen up, and it's going to have all your shares here already inputted in that slot. So the system really does it for you, but I like to make sure to check. Okay, just check, know what you're doing. I'm selling to close. I know the price I want, boom, and then I'm going to send it in. I'm not going to use good till cancel on this one unless I just want it to sit there. You can, but I'm going to send it in. Now, let me just say one more thing about market orders, limit orders, because I mentioned this when you're opening the trade and when you're closing the trade. What happens if you do put a market, there I go again, limit order? What if I put a limit order in there? Remember, that's not the one that will execute automatically. What if I put a limit order in and it's not getting filled, right? Because again, that's a negotiation. I'm telling the market maker, this is the most I'll pay. You're asking for 134.61. I'm willing to give you 134.49. That's what's on our screen here, right? Let me zoom in. You can see this middle price right here, 134.60. That's what so what if he's just not filling it? Well, then I have to make a decision. He's not willing to budge. This is a negotiation and he's not budging. So how much do I want this trade? Am I willing to come up a bit or not? If not, then I can leave the order in there for a little while longer, right? I never want to leave it too long or forget about it, right? But I could put it in there and leave it for a bit, see if he fills it. If he doesn't, then I go in to my account, same spot. I can go in and I can cancel it, okay? I can cancel the order and then that's it, right? I've just canceled the order. He no longer sees it. It no longer exists, and that's it. It's gone. Or I can change the price and resubmit the order. And Tastyworks will allow me to do that easily. In this same screen, I can right click. Now, when there's actually a trade in there, that's just my screen right click. But if there was a position here, then I could right click and it's going to say, you want to close the position, or you can also change the order. You can alter the order if you're not yet in it yet. So that's what you want to do, okay? So your limit price is going to be that negotiation. So just keep an eye on that, okay? If we had some open positions here, you know, this is just an account that you can just look at to test. It doesn't have any open positions in it right now. So for that reason, it doesn't show that on the screen, but that's ultimately what you can do. And it's pretty easy to do. It's pretty easy to do. Just for clarity's sake, extended hours, you would have to actually apply for extended hours and you'd be able to trade once the markets close. It's a very different ball game at that point. Obviously, we don't talk about that, teach that. We don't do that. You will see, like I've got over here, post-market prices and things like that. But that would be a special consideration, special case. So I don't do that here. So ultimately, that is going to be placing a trade. Oops. Just go back to the home screen there. Click on trade, over to stock. That gives me the options of everything that I want to do, okay? So do we have any questions? Okay, this is good. Jeffrey said, I love stop outs. They've saved me twice and I've only been trading this year. Get rid of that. I've only been trading this year. Okay. So yeah, I mean, that's the thing. It's insurance, right? We pay for insurance. Do we always use it? No, we don't always use it, but we have it. And you're sure glad you have it when you need it. And that's why we do it. So that's word to the wise for some of us out there who may say, you know what, I'm not going to bother with the insurance. I moved from Texas to California just late last year. When I rent a car, I'm telling you, I never get the insurance, full disclosure. I just don't. Or I have coverage some other way, so I don't pay the car company for the insurance because they really get you on that. Well, I rented a moving truck when I moved from here in Texas out to the West Coast. I was at the counter and, you know, I just thought I should get the insurance. I just should. I should just get it. I was getting a great deal on the truck. I thought I'll get the insurance. Well, sure enough, once I got to Southern California, once I got to Los Angeles, this girl pulls out of her spot late while I'm making a turn with this big old moving van towing a car behind it. And I had the insurance. So you know what? You're glad to have insurance when you need it. So don't be one of those traders. You just don't do the stop out. You don't have it. And then you end up needing it and it's not there. So we use the stop outs and Jeffrey gives us a good testimony on that. They've saved him twice already. And that's your capital. That's your money. That saves money. And it reduces anxiety. I'm in the trade and I know there is a tool working in my favor that if this thing doesn't do what I want it to do, I'm out of the trade. Okay. So he said, are there fees for multiple limit orders? Okay. Are there fees for multiple limit orders? If you are with Tastyworks, okay, and you are buying stock, they are charging 0 fees on stocks right now. Okay, so that means if you put in, let's say we just looked at Carvana, you bought 100 shares, right? You bought 100 shares. So normally they would charge you 1 fee. Remember I said not per share. Okay, you don't pay a brokerage fee per share. You have to pay for the stock per share, but the fee for that transaction is based on the whole number, right? 1 share, whether you buy 100, whether you buy 1,000, whether you buy 67 shares, it's going to be 1 flat fee. But Tastyworks has moved their fees to 0, and they've always had $0 closing fees. Okay, so that means no fee at all. Okay, so are they going to charge me twice? No. I've got another question here. If you change an open order, do you cancel and resubmit or change it? Do you have a preference? Okay, that's good. So it depends on how you do it. Because in the screen I was showing you, there's 2 ways you can do it, and you've described both of them. You could go, all right, where are my open orders? Go in, I'm going to cancel it. It's going to cancel. I'll go back to the screen that I was showing you. Like, let me just show you back to this screen right here and go ahead and do a whole new order. I could just do that, okay? But the software makes it easier. You can, again, like I said, find the order that's open. It hasn't been filled yet. Right-click it, and you'll be able to change the order. And what it'll do once you click change the order, it'll take you back to the screen I just showed you again, and it'll let you change what the price is that you're gonna do your stop out at. So assuming that if you're gonna change an open order, the thing you probably wanna change is the price. Maybe you wanna change the amount of shares that you're gonna sell if it stops out. You could do that. That would be a very unique situation. I mean, as far as a stop out goes, you're gonna wanna make sure, hey, I'm protecting all of my risks. So that said, it's going to most likely be the price you're going to change. It'll automatically take you there, and then you can change the price. Okay, so there really are 2 ways to do that. I find it's faster, just right-click it, change order, other than canceling and re-entering a new one, because it'll take me right to the screen where I can change it. So that's a really great question. Thank you for that. So we're coming on about 50 minutes here. It's a good deep dive into when do I really have a trade? And when I have a trade, what do I do? Buy to open, sell to close, place a stop out. Okay, we're going to place a stop out. I can only place the stop out once I actually own the stock. And like we just saw, I can change the order when I need to. Okay, I can change that order. I could have an open stop order that's been in the market for 3 days, and I just go in, change it. And it doesn't cost me money to change it. Because there's $0 fees, it's almost a moot point. But if there are any transaction fees, of course, it's going to show you when you execute the order. But that's my point. You'll only be charged when an order is executed. Okay. So if an order is just open, that's not something they're going to charge us for, because it's not actually filled. It's just an order sitting on the desk, if you will. Okay. So that is getting in and placing your first trade. Now, this takes some practice. I wouldn't expect anyone to watch this session and go, okay, this is the first time I've seen this. I guess I know everything there is to know. Of course not. But this is a good look at basically what I have to do is I have to know the difference between a limit and a market order. I got to know the price I want in, the price I want out, the price I'm going to stop out, and then I just got to go into my brokerage account and fill it out. Okay, I recommend trying it a few times with one share on a cheap stock. Just one share. My very first stock trade that I ever did, I did it on Visa. It was dirt cheap. I bought one share, I got in, and a short time later, I got out. It was really for me just to break the ice with the order ticket, which is what we've been looking at this whole time, is what's called the order ticket. Okay, so that said, looks like our questions are answered. I am going to move on. If there's anybody out there who's joining us at Tradeway for our Monday night study groups, I will be on there with Mr. Jared Russell here in just a few moments. But if not, always glad to see you. Glad to have you on here. I will be in the Facebook page commenting if you guys have any questions that come up after this. And as always, I mentioned we are going to be on same time, same channel on Wednesday. You can join us there. Keys to breakthrough. I'll tell you what, so much of trading is an inside job. You think about driving a car. The car is the vehicle that's going to get you where you want to go faster. But is the car more important than what's going on in the head of the driver? So it's amazing to me that a lot of traders think mostly about the car and they don't think about what's going on in here, because the driver is going to drive the car. So that said, Wisdom Wednesdays, we do the same kind of a broadcast, but we're going to focus on a totally different aspect of this. And it has to do with trading, but it has to do with so much more. And that's part of who we are here at Tradeway. So join us for those. Again, that's the Wisdom Wednesday broadcast, same time right here. And we'll see you on Wednesday. Otherwise, back here again for another great session next Monday. Hope you guys are putting this content together. This is helping you feel confident and hopeful about starting your own stock trading business at home. It is possible to do, and it's a very, very, very cool opportunity. So again, glad to have you, and we'll see you next time, guys. Thanks so much.